The company's focus on innovation and customer satisfaction has driven growth in the health and wellness industry. Introduction Health Catalyst Incorporated is a leading provider of data analytics and population health management solutions for the healthcare industry. With a strong focus on innovation and customer satisfaction, the company has established itself as a major player in the health and wellness market. In this article, we will delve into the company's financial results for the quarter and year ended December 31, 2024, and explore the factors that have contributed to its growth. Financial results Health Catalyst Incorporated has reported total revenue of $307 million for the quarter and year ended December 31, 2024. Leadership changes at Health Catalyst. Health Catalyst, a leading healthcare technology company, has announced several key leadership changes effective December 1, 2024. These changes aim to strengthen the company's leadership team and position it for future growth and success. New board member Dr. Jill Hogood Green will join the Health Catalyst Board of Directors as of December 1, 2024. Dr. Green is a renowned expert in healthcare policy and has served as the director of the National Institutes of Health's (NIH) Office of Research on Women's Health. The importance of non-GAAP financial measures in the world of finance. Companies often use non-GAAP financial measures to provide a more comprehensive picture of their performance. These measures, which go beyond the traditional generally accepted accounting principles, GAAP, offer a more nuanced view of a company's financial health and prospects. What are non-GAAP financial measures? This change in terminology is intended to emphasize the importance of our platform in the lives of our clients and to better reflect the evolving nature of our relationships with them. The evolution of platform clients. The term platform clients is a significant update to our existing metric, which previously referred to DOS subscription clients. This change is a reflection of the growing importance of our platform in the lives of our clients and the evolving nature of our relationships with them. Historical context. Historically, our clients have been defined as those who directly or indirectly access our platform via a technology subscription contract. This definition was based on the traditional model of a client accessing our platform through a direct subscription to our technology. However, as our platform has evolved and become more modular, we have come to realize that our clients' relationships with us are more complex and multifaceted. The importance of platform clients. Platform clients are not just clients who access our platform through a technology subscription contract. They are entities that have a deep and long-standing relationship with us, built on trust, collaboration, and mutual benefit. Calculating dollar-based retention rate. The dollar-based retention rate, DBRR, is a widely used metric in the software industry to measure the percentage of revenue that is retained by a company from its existing customer base. It is calculated by adding the ARR, annual recurring revenue, of technology and professional services from the platform clients. Key components of DBRR. Technology ARR. This component represents the recurring revenue generated from technology services provided to customers. Professional services ARR. This component represents the recurring revenue generated from professional services provided to customers. Platform clients. These are the customers who have a subscription to the company's platform and are generating revenue. ##### formula for calculating DBRR *** formula for calculating DBRR. The formula for calculating DBRR is as follows. DBRR equals technology ARR plus professional services ARR / total revenue. Example calculation. Let's say a company has the following revenue and ARR figures. Total revenue, $100 million technology ARR, $40 million professional services ARR, $30 million. Using the formula above, we can calculate the DBRR as follows. DBRR equals $40 million plus $30 million /$100 million. DBRR equals $70 million /$100 million. DBRR equals 0.7 or 70%. Importance of DBRR. The DBRR is an important metric for companies to track because it provides insight into the health and growth of their customer base. Forward-looking guidance is essential for investors and stakeholders to make informed decisions about a company's future prospects. Forward-looking guidance. Health Catalyst, a leading healthcare technology company, has been providing forward-looking guidance on its financial performance. This guidance is crucial for investors, analysts, and stakeholders to make informed decisions about the company's future prospects. In this article, we will delve into the details of Health Catalyst's forward-looking guidance, focusing on its revenue and EBITDA projections. Revenue projections. Health Catalyst provides guidance on its total revenue, which is a GAAP measure. This means that the revenue projections are based on generally accepted accounting principles. The company's revenue projections are typically based on its historical performance, market trends, and industry benchmarks. Upcoming conference call. Health Catalyst will be hosting a conference call to review the results of their latest study on Wednesday, February 26, 2025, at 5 p.m. ET. Information regarding our company, our management's expectations, and our future results, including the statements made in this press release, constitute forward-looking statements that are subject to known and unknown risks, uncertainties, and assumptions about us, our business, and our future results. We cannot predict the future or guarantee that the events described in this release will occur. Our forward-looking statements are based on currently available data and are subject to change. Potential risks and uncertainties include **** the challenges of implementing a new business model as companies navigate the ever-changing landscape of the digital age. They must be prepared to adapt and innovate to remain competitive. One of the most significant challenges facing businesses today is the implementation of a new business model. The company has a total of 1 million shares of authorized stock. The financial situation of XYZ Corporation. Overview of the company's financials as of December 31. XYZ Corporation's financial situation can be summarized as follows: assets, $858,929. Liabilities, $701,814. Total stockholders' equity, $493,722. Authorized stock, 1 million shares. Analysis of the financials. The company's financial situation can be broken down into several key components. Assets. The company's assets include **** cash and cash equivalents, $100,000. Accounts receivable, $200,000. Inventory, $300,000. Property, plant, and equipment, $200,000. Other assets, $158,929. Liabilities. The company's liabilities include **** accounts payable, $100,000. Accrued expenses, $150,000. Long-term debt, $450,814. Other liabilities, $100,000. Total stockholders' equity. The company's total stockholders' equity is $493,722, which represents the company's net worth. Hashtag key takeaways **** key takeaways. The company's financial situation is a reflection of its overall health and stability. The following key takeaways can be derived from the company's financials. The company has a significant amount of assets, which provides a solid foundation for its operations. The company has a substantial amount of liabilities, which may indicate a higher risk of default. The government's Transparency Initiative, a step towards accountability. The government's new initiative is a significant step towards promoting transparency and accountability in the use of public funds. This program is expected to be launched in the coming months, and it will provide a platform for citizens to report any irregularities or misconduct. How the program will work. The program will be a web-based platform that allows citizens to submit reports of any irregularities or misconduct they encounter while using public funds. The platform will be user-friendly and accessible to all citizens, regardless of their age, education, or socioeconomic background. The platform will be designed to ensure that all reports are anonymous, allowing citizens to report irregularities without fear of retribution. The platform will also include a mechanism for citizens to provide supporting evidence, such as documents or photographs, to back up their claims. Those who hold this fixed point of view may feel a sense of comfort and familiarity, but they are also limiting themselves to a narrow and inflexible perspective. This fixed point of view can be seen in the way people respond to new information, where they may resist changes or cling to their existing beliefs. The illusion of a fixed point of view. The idea that there is a fixed point of view, a fixed position, or a fixed attitude, which is unchanging and permanent, is an illusion. This notion has been debated by philosophers and psychologists for centuries, with some arguing that it is a fundamental aspect of human nature, while others claim that it is a product of societal and cultural influences. The benefits of a flexible perspective. While a fixed point of view may provide a sense of security and stability, it also has its drawbacks. Regular exercise can also help to improve mental health and reduce stress levels. A healthy diet can also provide essential nutrients and vitamins that are necessary for maintaining good health. Regular exercise can also help to improve sleep quality and reduce the risk of certain cancers. A balanced diet and regular physical activity can also contribute to a longer and healthier life. In conclusion, a healthy diet and regular exercise are essential for maintaining overall well-being and reducing the risk of chronic diseases. A healthy lifestyle can also help to improve mental health and reduce stress levels, and a balanced diet and regular physical activity can provide essential nutrients and vitamins that are necessary for maintaining good health. The importance of a healthy diet and regular exercise. Benefits for overall well-being. A healthy diet and regular exercise are essential for maintaining overall well-being. A diet rich in whole foods, fruits, and vegetables is crucial for maintaining physical and mental health. Whole foods provide essential nutrients, vitamins, and minerals that are necessary for maintaining good health. We also exclude the impact of foreign exchange rates and the impact of changes in accounting principles. Understanding the importance of non-GAAP financial measures. Why non-GAAP measures matter. Non-GAAP financial measures are used to provide a more comprehensive view of a company's financial performance. These measures help investors and analysts understand the underlying trends and drivers of a company's revenue and profitability. By excluding certain items from the traditional GAAP, generally accepted accounting principles, financial statements, non-GAAP measures provide a more accurate picture of a company's core business performance. Benefits of non-GAAP measures. Improved comparability. Non-GAAP measures allow for more accurate comparisons between companies, as they exclude items that can vary significantly from one company to another. Enhanced transparency. By providing a clearer picture of a company's financial performance, non-GAAP measures help investors make more informed decisions. Misusing non-GAAP financial measures can be costly for investors and companies alike. However, we also recognize that non-GAAP financial measures can be misleading if not used properly. The importance of non-GAAP financial information. Non-GAAP financial information, such as earnings before interest and taxes, EBIT, is a widely used metric in the business world. It provides a more comprehensive picture of a company's financial performance by excluding certain expenses and income items that may not be directly related to core operations. Benefits of non-GAAP financial information provides a more accurate representation of a company's core operations and profitability. Helps investors compare the financial performance of different companies in the same industry. Allows companies to focus on their core business and make strategic decisions. Can be used to identify trends and patterns in financial performance. The risks of misusing non-GAAP financial information. While non-GAAP financial measures can be helpful, they can also be misleading if not used properly. Some common pitfalls to watch out for include over-reliance on non-GAAP measures. Relying too heavily on non-GAAP measures can lead to a lack of understanding of a company's underlying financial performance. Lack of transparency. Failing to disclose the specific non-GAAP measures used can make it difficult for investors to understand the company's financial performance. Misleading comparisons. Comparing non-GAAP measures across different companies can be misleading, as companies may use different non-GAAP measures or exclude different items. It is a useful metric for investors to evaluate the company's profitability and efficiency in managing its cost structure. Understanding the importance of adjusted gross profit. Adjusted gross profit is a key performance indicator, KPI, that provides a more comprehensive view of a company's financial performance. The reconciliation is as follows. Reconciling adjusted gross profit and adjusted gross margin to gross profit and gross margin. The reconciliation of adjusted gross profit and adjusted gross margin to gross profit and gross margin is a critical process that ensures the accuracy and consistency of financial reporting. In this article, we will delve into the details of this reconciliation, exploring the key differences between the two sets of financial measures and providing concrete examples to illustrate the process. Understanding the basics. Before we dive into the reconciliation process, it's essential to understand the basics of adjusted gross profit and adjusted gross margin, as well as gross profit and gross margin. Asterisk gross profit. Gross profit is the difference between revenue and the cost of goods sold, COGS. The paraphrased text is, our acquisition-related expenses, net, reflect the costs associated with integrating the Lumion, Caraviv, Armis, and KPI Ninja acquisitions. Our restructuring costs consist of severance payments and other associated costs resulting from workforce reductions. Note, the original text is a summary of a financial report, likely from a company's quarterly or annual report. The paraphrased text is a rewritten version of the summary, using different words and sentence structures to convey the same meaning and core information. Here is the rewritten article in the required format. Acquisition-related expenses. Our acquisition-related expenses, net, reflect the costs associated with integrating the Lumion, Caraviv, Armis, and KPI Ninja acquisitions. These expenses include various costs such as integration costs, transaction costs, employee severance packages, training and onboarding expenses, technology integration costs. These expenses are a result of the company's efforts to integrate the acquired companies into its existing operations, and they are a necessary cost of doing business in the competitive healthcare technology industry. Restructuring costs. Our restructuring costs consist of severance payments and other associated costs resulting from workforce reductions. These costs are a result of the company's efforts to streamline its operations and reduce its workforce in response to changing market conditions. Severance payments to departing employees. Costs associated with closing or consolidating facilities. Training and development expenses for remaining employees. Outplacement services for departing employees. These costs are a necessary part of the company's efforts to adapt to changing market conditions and remain competitive in the industry. Conclusion. In conclusion, our acquisition-related expenses and restructuring costs are a necessary part of our company's operations. Restructuring, a costly but necessary process for adapting to change. Restructuring, a costly but necessary process. Restructuring is a complex and often contentious process that can have far-reaching consequences for an organization. While it may be necessary to adapt to changing market conditions, technological advancements, or shifting business priorities, it can also be a costly and emotionally challenging experience for employees. The challenges of restructuring. Restructuring involves a range of challenges, including communication and transparency, ensuring that all stakeholders, including employees, customers, and investors, are informed and engaged throughout the process. Cultural transformation, adapting the organization's culture to reflect the new structure and priorities. Talent management, identifying, developing, and retaining key talent to drive the organization's future success. Asterisk change management, implementing effective change management strategies to minimize disruption and maximize adoption. ####, the costs of restructuring. ***, the costs of restructuring. Restructuring can be a costly process, with significant expenses associated with outplacement expenses, providing support and resources to help employees find new employment. Remaining employee benefits, continuing to pay benefits to employees who leave the organization. Loss of productivity, the temporary loss of productivity and efficiency during the restructuring process. Adjusted EBITDA is a useful metric for evaluating the performance of our business segments and for comparing our performance to that of our peers. It is also useful for evaluating the performance of our business segments and for comparing our performance to that of our peers. Adjusted EBITDA calculation. To calculate adjusted EBITDA, we use the following formula: net loss interest and other, income, expense, net income tax provision, benefit, Depreciation and amortization. We calculate the adjusted EBITDA for each business segment separately, and then we calculate the total adjusted EBITDA for the company. Adjusted EBITDA example. Let's consider an example to illustrate how to calculate adjusted EBITDA. Suppose we have a company that has a net loss of $1 million, interest and other income expense, net of $200,000, income tax provision, benefit of $100,000, and depreciation and amortization of $300,000. The importance of transparency in financial reporting. As a responsible business, it is essential to provide stakeholders with accurate and timely information about our financial performance. This is particularly crucial in today's business environment, where investors, analysts, and regulators rely on financial reports to make informed decisions. In this article, we will delve into the importance of transparency in financial reporting, highlighting the benefits and challenges associated with this practice. The benefits of transparency. Transparency in financial reporting offers numerous benefits, including improved credibility. By providing clear and concise financial information, businesses can establish trust with their stakeholders, which is essential for building long-term relationships. Enhanced decision-making. Transparent financial reporting enables stakeholders to make informed decisions, which can lead to better investment choices and more effective business strategies. Reduced risk. Transparency can help identify potential risks and issues early on, allowing businesses to take proactive measures to mitigate them. The company has been using this measure to track progress toward its long-term goals and to compare its performance to industry peers. What is adjusted net income? The importance of financial reporting. Financial reporting is a critical component of any organization's operations, providing stakeholders with a comprehensive understanding of the company's financial performance and position. It is a vital tool for decision-making, risk management, and transparency. The role of financial reporting in decision-making. Financial reporting plays a crucial role in decision-making, as it provides stakeholders with a clear picture of the company's financial health and performance. This information enables stakeholders to make informed decisions about investments, lending, and other business activities. Key aspects of financial reporting that inform decision-making include plus revenue recognition and accounting policies, plus asset valuation and depreciation, plus cash flow management and liquidity, plus financial ratios and metrics. The impact of financial reporting on stakeholders. Financial reporting has a significant impact on stakeholders, including investors, creditors, and regulatory bodies. These costs are not included in the litigation costs. Litigation costs. Litigation costs are expenses incurred by a company in the process of resolving disputes through the courts. These costs can be significant and may include court filing fees, attorney fees, expert witness fees, document preparation costs, travel and accommodation costs for court appearances. Examples of litigation costs. A company may incur litigation costs when defending a lawsuit filed by a competitor alleging trademark infringement. A company may also incur litigation costs when resolving a dispute with a supplier over a delayed shipment. +1 855 309 6800 ir@healthcatalyst.com. Health Catalyst Media. Contact Amanda Flanders, SVP, Marketing and Communications Media at healthcatalyst.com.